Hello, dividend executives. Welcome back. The stock market is open, so you already know we are buying stocks and we are adding assets to the portfolio. Today's a great day. We are going to add a new stock to the portfolio that is a dividend payer, and we are going to add to some of our favorites. We have plenty of buying power available, so let's dive into it. Pretty much flat for the day, only down 0.15 for the day. Actually, we're at 0.00 for the day. For the week, we're down 0.87%. For the month, we're down 2.63%. 3 months, up 12.41%. And then all-time, which we are coming up on the annual anniversary of this portfolio when we started at 0, and we were up 2.37%, which is not too bad considering we have been layering in a bunch of monthly dividend stocks, which historically are not great in the terms of growth. But we've also been layering some of our backbones that will get growth over time, like VTI, SCHD. So yeah, that's where we're at. As far as dividends go, we haven't had any new dividends come in. We are still sitting around the $195 a month mark for dividends. And we have a couple more that are going to be coming in. We will get to those a little bit later. But that's where we're at. The last dividend we received was PSEC at $2.50. And that went in on drip and bought us additional, basically half a share. So 0.412. So yeah, these are the options we have on the table. Tesla earnings is this week. So this could go either way. If we are going to go in the money, I'll probably roll it down and out. Again, not too heavy on the options in this portfolio, but we are just letting these positions ride. And that's where we're at for those. So let's jump down to it and let's buy some stocks. First and foremost, we have to buy one of our favorites, and that is SCHD. We are up on the position 5.84%. We have $3,500 into this fund at 46 shares. Big portion of the portfolio, but of course we are going to buy it every single week. So let's do it. Let's come in here. Let's spend $25 and let's buy some SCHD. One of my favorites, quarterly dividend payers. So we won't see anything this month. We won't see anything next month, but we will see a nice hefty payment in March. And this one just keeps on building. If we go to the history here and we look at the dividends, just look at that. $3 to $24 to $26, now to $33. So hopefully we can break that $35 mark on the next dividend payment. And we get nearer and nearer to being able to buy ourselves an entire share. We bought almost a half a share last time. Hopefully this next time we can buy half a share. But SCHD keeps building. Another one that has just been getting beaten down. It's recovered a little bit, and that's Realty Income. Over the last 3 months, obviously it's done really well. Down 16% in the last year. I'm sure interest rates are absolutely destroying this company. But it's a good buy, and anytime I can average down on positions that I want to hold long-term, I'm going to. So we are at 4.17% of the portfolio in this particular stock. We are down 6% on the position. So just like that, we are going to average down. We're going to add another $25 or 0.45%. And this, we're getting paid over $3 a month in dividends on this one. So not too bad. Obviously, we're down $44 on this. But if you included all the dividends, we're probably not down that much. Actually, let's just look at that real quick. So if we come in here and we just look at show more and we go to dividends. Yeah, you can see three, look at all these dividends. $2-3, start at 9 cents. Yeah, so a bunch of dividends coming in for, we're going to continue building that. We went from 290 to 303 to 305, so hopefully we can be above that for the next dividend. So that's SCHD, that's O. We have one more of our tried and true that we want to add to, and that's AGNC. We're down 2% on this position, 3.61% of the portfolio. Great dividend payer. This one paid me $7.10 last month and $6.71 the prior month in December. So we, like we were saying, this one is actually really, really close to buying a full share, which is the dividend dream, right? Is where your shares buy you an entire share each and every single month off the dividends. So we're getting close. We're at 0.72%. We're probably going to get there in the next 3 or 4 months, which will be awesome. So per usual, we're going to do the $25 into this one. That's going to buy us 2.59 shares. It's going to average down our cost a little bit, not a whole lot, but it will average it down. And now we are sitting at the average cost of $9.87, where the stock's at $9.64. So 1 year, this is down 16%, very similar to Realty Income. In 5 years, this one's getting obliterated, but this is more of a dividend play. So We're just going to keep adding to this one and just little bits here and there, build our passive income. Probably get this one to 100 shares and then I'll stop adding to it. But that'll take time over the next couple of years. We'll just keep adding to that one. And then next, the one we are going to add is going to be a new stock, and it's called ENB, Enbridge. Over the 5-year, this is very, very flat. 1 year down 14%, but a great monthly dividend payer. This is gas and oil. You could see here lots of different ways that they're making money, but yeah, this is out of Canada, and they pay, it's over 7%. We'll jump into that in just a second. Really, really old company, 11,000 plus employees, and founded in 1949. So this is going to be a good one. We're going to add this. Lots of volume. The dividend yield is 7.35%. And we are adding this now to our quarterly dividend payers fund, right? So I told you one thing that I wanted to do in 2024 is I wanted to add more quarterly dividend payers, so we can sprinkle in some differences in there when it comes to the actual monthly dividends that come in, and it'll sway the income up and down a little bit. So we're adding this one to the fund. We are going to come in here and we are going to buy ourselves $50 in this one to start it out. It's going to buy us 1.39 shares. I think the last dividend was around 63 cents a share. Again, this comes in a quarter. Nothing like these monthly high yield, but I think this one will stay pretty stagnant and be a nice backbone to the smaller portion of the portfolio. So that's ENB. That's what we're adding. So let's jump into that. Let me jump over to a couple different things, right? So one thing we want to check is the spreadsheet. Last month in December, we came in at 192.88. This month, you can see we are at 194.41. If I scroll in here a little bit, 194.41 for the total, and this is for 2024. Obviously, we are going to be adding more and more funds. We may be deleting some funds as well as we go on. I want to consolidate some of my yield max funds. You can see there's just a bunch of them there. So I'll probably consolidate those a little bit. Might be getting rid of some stuff like GOY and FBY. And probably OARK as well, just depending. They do have some crypto side, but those ones are just getting beaten down lately. So that's where we're at on those. And that's where 194, I think we could break 200. We still have GLAD, Devo, and SPHD that are going to come in. And then we'll have BIT come in as well. The others will probably come in on a quarterly basis. So that's where we're at for the monthly. You can see the trajectory last year with the blue lines and red lines. The goal is just to beat every single line we had from 2023, and we're going to do it. Don't worry about that. And so let's jump over the last thing. This is Purple Brick. I was just taking a look at where we were at. January, it's saying 218. Probably going to come in way less than that. I'm not sure how it's calculating some of these, but it does have BITO coming in at $2.28, Devo coming in at $2.96, and then it's saying GLAD is going to come in at $4.03, so not too bad. If we could break the 200, I'm stoked. That would be a new record for the portfolio, so we're just going to keep adding to it each and every single week, and eventually it's just going to keep going up. So 218, and then if we forecast into February on Purple Brick, it's looking at 218 again because it's just taking the current shares and it's taking the estimated, because it doesn't know what the estimated dividends or the actual dividends will be for February as of yet. But that's what it's forecasting. So if we can just keep building this number up, it's awesome. And then if we obviously get into the quarterly, we're at 295 for March, which would be absolutely insane. And the reason why is because some of our quarterlies start coming in, right? VYM, which will be our first dividend payment there, would be coming in at 395. VTI at 672, and that's based off of the 6.7 shares we have there. And then this is where it's actually thrown off. This is not accurate. TSLL, we do not have 250 shares. Well, we do have 250 shares. We do not have it in the dividend paying account, so that one necessarily won't be happening. And then that should be everything updated there. Where's the SCHD? SCHD should be coming in there as well. Right here, 34.50 off of the 46 shares there. So as long as we continue to add to that, this payment is probably going to go up from there. So we can expect probably around $35 for SCHD. So that's just a look into the future. And then last but not least, I wanted to look at this company. So let's pull this up. This was another one I was looking at, but let's pull up ENB. So this is what we just added. Enbridge Incorporated, for the 5-year, pretty much flat. It's up 0.73%. Analysts are giving it a buy rating. Wall Street's giving it a buy rating, and Quant is giving it a hold rating. This is a big dividend player for me, right? So dividend safety is a B minus. Dividend growth is a C plus. Dividend yield is a B, and consistency is a C minus, right? So we look at the dividend yield. We're talking about 7.34%. Annual payout per share for every share that I own was $2.63, is what they're predicting. And the last dividend, which was paid in December, was 65 cents a share. So really not too bad. If we look at, let me pull up the dividend history here. So if we look at the dividend history, you can kind of see on a 1-year basis, it's just really flat. It's gone down a little bit, I guess you could say. But yeah, really, really flat, right in there between that, 60 and 65, 66, 66, 65. It's just really that it's pretty consistent each and every single month. So that's what we like to see. And yeah, here, if we jump into it here, we're talking 64, 65, 65, 66. As far back, the last time we were under that 65 mark, was really back in 2020. For their regular quarterly dividend payment. But yeah, this is one we want to add to it. You can see that they've just been slowly increasing their dividends over time, which is something we want to see. We want to see the growth in dividends. We went from 35 cents to 41 cents, 50 cents. And then we just slowly have been climbing up all the way up until the 60, mid 60s, which is where we're at now. So I'm going to be adding to this one, probably not a whole lot, probably under 2.5% of the portfolio when we get it to the full potential of the position. But this is one we're going to be adding. And this is a company that I think will do well in the dividend portfolio, and one that many like. So we're going to be adding to that. But that's everything I got for this week. As always, we are buying assets. We are adding them to the portfolio. We are building our passive income each and every single month so that someday we can get to retirement where the portfolios just pay us to live. We don't have to do the 9 to 5 anymore, and we have our money make money for us each and every single week. That is the goal. I'm doing it here each and every single week, one brick at a time. $100 here, $100 there. Obviously, we made some plays today that are going to get us closer to that direction, but we are striving to get that now $200 a month every single month, and we are doing it through dividend investing. So thank you, everybody, for tuning in. As always, don't forget to drop a like. If you have any companies that you think I should add to my watch list that we potentially could be adding to the portfolio for 2024, drop them below, as always, and happy investing. Catch you next time.